Good afternoon, good morning, or good evening. To everyone, wherever you are in this world, I thank you for participating in this IR talk today, and a very warm welcome to everybody. First of all, some housekeeping rules again. I will start with a quick summary of the last week's results again, and then we can go over to Q&A session. Please raise your hands then to ask your questions, and then I will let you ask the question, and please then switch your camera on. And one hint, this call will not be recorded by us. So first of all, let me summarize the most important points of 9M 2025 given last week in the earnings call. So with sales revenues in the 9-month period of around 980 million euros, we grew by 5%. And in Q3 alone, we grew even by 6% to 312 million euros. FX turned negative for us since approximately Q3, and adjusted for these effects, growth rates would even be at around 6 to 7% for the 9-month period, and for Q2 and Q3 between 8 and 9% respectively. So this is something I want to highlight. It was the second consecutive quarter now again with organic growth rates within our long-term CAGR ranges of 8-9%. So this means the general business situation is looking very good. Just FX is hindering us from growing sales revenues even at a higher rate. And also the order situation is looking promising, so that we are confident to reach our sales guidance for fiscal year 25 at a growth rate in the mid-single digit range, so at around 5%. Margin-wise, we need to mention the two biggest impacts, of course, and that is the US tariffs and strong euro, or the other way around, the weakness of our most relevant currencies, as already commented on the sales development earlier. And as we already saw it in Q2, there was again a significant margin impact at around 120 basis points on the EBIT margin just for Q3. So this was again the same magnitude that we saw in Q2. And so for 9-month period, for the 9-month EBIT, this means a negative impact of around 80 basis points on the EBIT margin. And status now, we expect that the impact will continue in Q4, putting some headwinds for us on the margin guidance. On the other hand, of course, in the top line, we will be able to compensate with good business development, but on the bottom line, there will still stay some negative margin impact coming out of this topic. And on the tariff situation, we are facing additional costs, as already said, for the import tariffs to the US, that we estimate now at around 11 million euros for fiscal year 25. 6 million euros of that already were in the 9-month period, and the remainder, so approximately 5 million euros, will be in Q4. So the combination of all these facts led us to make the guidance more concrete in August this year for a guidance, margin guidance in the magnitude of 25 to 26%. And looking at the business development so far and the expected developments we have now after the 9-month period, we can confirm this guidance. So this means total guidance would be then we grow in the mid-single digit area and we realize a margin of 25 to 26%. Of course, we cannot give you a guidance for next year, but one thing that we already mentioned last week in the earnings call is the expected extra costs for US tariffs, and I can repeat that here. This is around 25 million euros, so total costs for 26, or 13 million more than in 25, resulting in a margin drag of around 1 percentage point for 2026 compared to 2025. And of course, I know that you would be now keen on hearing more about our reactions on these additional costs. But as already said last week in the call, and there is no change until now, there is no decision yet on pricing that we can communicate now. And first of all now, so those who know us, who follow us for a longer period of time, know it in the context of our budgeting where we are in now, that the first step would be to evaluate saving measures in order to counteract higher costs, and then afterwards derive maybe a potential pricing action. But that is all that we can say now about that topic. And yes, it was very short. I think there's not a lot more to say from my side now. And with that, I open or I'm open for questions. So let me just wait one thing. Yeah. We have some problems with getting the people on the call. Why ever? Lars, did it now work? We just did a short reminder for last week, and now we are at the point where we start in the Q&A. I think you are right in time.
Okay, perfect. Yeah, I struggled to get on the call indeed.
We have some problems. There's another guy who is still, it's running, but I don't know why it does not work. Let's see. Now I think it's on. I think Nicholas, I think you're on. It worked now. Okay, so guys, also for Nicholas, we did just a short update on last week. There was nothing new, and now we can go over to Q&A. I just in the I think maybe you might ask the one or the other question maybe we already had, but that's okay.
Perfect. Thank you very much.
So, who wants to start? Lars, you want to start. Good.
So let's get the party started. Any update on US pricing? Have you taken a decision in the meantime?
I just repeat my second last sentence. I think there is no update on last week's call information. So I said it. We are now in the budgeting phase, and of course there we then are evaluating all the savings measures that are possible, and then later on there will be a decision on pricing.
Sorry, can you hear me? I can't. I'm still stuck in the waiting room, but I can hear you. I'm not sure you can hear me.
We can hear you now, Nicholas.
Okay, great.
Sorry,
can I ask a question? Sorry for not raising my hand, because I don't have the functionality where my screen is stuck. But could I maybe just on the US, because we just talked about the US, the 4% growth, that's obviously a significant slowdown. And I just wanted to understand that a bit better. I know you had a tough comp, but is that the only explanation for that deceleration? Because it's basically, I think it's from 10 to 4, no? Sequentially.
Yes, it is. So there is, when we look on the run rate, we are doing quite well. Meaning last year, Q3 was by far the strongest quarter we had in the North American territory. I can just repeat it to you. We had around 70 million in Q2 and Q4, and we had about 77 million in Q3 last year. And this year, Q3 was okay, but it was a little bit less, and adjusted for FX, as you said, it was around 4% growth. And when you look into the 9-month figures, we grew by 10% organically and 6% after FX. So meaning also here a little bit of negative impact, but Q4 should be then again a more normal quarter. Was it okay? So Lars again.
Taking the opportunity. China, you said that production will start later this year, sales will start early next year. Shall we expect any additional ramp-up costs? And would you be willing to share with us when do you expect production in China to be break even? And is it possible to compare the gross margin or the profitability contribution? I assume production in China is cheaper. Selling prices are also lower. But when it comes to profitability contribution, is there any information you're willing to share with us?
Yeah, of course. So there is, we are in plan, as also said in the call last week. Start of production can be now, I think, in December, and the start of selling will be in March after the Chinese New Year. There will not be a significant amount of additional costs now. What do you say, ramp-up costs? So I think we are through that in the meantime. And the margin contribution, at first, it will presumably negative. That's for sure in the first quarters, years, depending on the development, of course. In the longer term, the plan is to have it approximately on group level. So meaning there is a lower price, but also there's lower production costs, and all in all, this should match that we come out with no margin dilution in the end.
Can I just ask a question on China?
Yes, you can.
Thank you. Yeah, just when you say no significant ramp-up costs, so the cost base, as we've seen it in Q3, is basically kind of that going forward is what we should expect, including the China model commercialization. Okay.
Yeah.
Okay, good. And can I just ask one more on OpEx?
Yeah, of course you can.
And again, sorry, I can't raise my hand. I'm still stuck in this initial screen. But R&D was quite high. Can you maybe elaborate a bit on what happened there?
Yeah, on the one hand, we you know that R&D is one of our major, let's say, topics we are investing in order to keep our innovative level high. And I think we brought out a lot of innovations in the last time. We are working a lot of the time on, let's say, connectivity, intelligence, software topics. So the major part of the people we hire is software engineers in the meantime. And on the other hand, so this means we have more people with higher salaries, and of course, everybody is producing a cost then in his job. So from that point of view, it's a pure capacity aspect. And the other thing is, but it is fee level, but it's maybe not that big. We do some with the Wittenheim, with the capitalization of the Wittenheim facility. And then, of course, we have some cost allocation systems. We did some changes here with the finalization of the Wittenheim facility. And with that, there was a little bit a higher amount that is allocated to R&D, also contributing a few percentage points here. But all over, it's really a capacity point of view, investing more into the future developments. Nicolas, all good?
Yes, thank you. Thank you.
Okay.
Perfect. That's very clear.
So, Oscar.
Yes, can you hear me?
Yes, I can hear you. Perfect.
Yeah. Yes. So obviously Europe and Germany were pretty good. I was wondering if you could expand on that as to why that was and how that sort of functions into appliances versus after sales.
Yes. So I think we announced it. Germany was all over very strong. Two major reasons why it was maybe even a little bit stronger was we had a quite weak previous year quarter, and on the other hand, we had good business in the after sales market this quarter, which can come in waves and go down in the next quarter again. We would say, of course, a growth rate of 18% for a German market is something you would not expect, of course, in the longer term. Even the 5% growth rate for the German market after 9 months is really ambitious for such a highly penetrated market. But sometimes it comes in waves. We had discussions. I was in a conference yesterday, discussions quite often on that. Sometimes, just let me circle back to your other questions, and then we have an explanation for that maybe. Also in Europe, we had strong development in most of the countries. There was no country that was really very weak. We had some very strong countries like the UK, for example, or Italy, but there was growth in all the major countries. And if you ask then, what is the reason? Is there the one reason? We can say no. It's really a broad development. And sometimes you see it in waves. You have weaker years where you maybe, for example, you invest in new sales guys. And of course, they are not efficient at the very first day. It takes 6-12 months. Then they are getting efficient in the market. Then they meet more customers. They visit the customers, invite them to cooking live demonstration. These figures are going up, and sometimes later these customers buy a unit. But you cannot say whether the hiring new people will be showing up in higher sales figures in 1 year or in 2 years or 6 months. This is something we need to wait for, and depends on the customer's plans. And that's why we say it's very, very important to continuously develop the sales organizations, to increase the sales teams in a structured way, so that we can fuel this growth story in the long-term view. But in the short-term view, in single quarters, you never can say, will this be that figure or that figure? So this is quite open. So from that point of view, that's a good news. So there is not the one reason. So like, for example, Asia last year with a big order, and when the order is gone, you have a weak following year. So here, I think the basis for the growth is strong, and that's why we are confident that we will continue on this path also in the coming quarters. But whether is this the 10% for Europe, or just, let's say, 5-6%, which we deem as something sensible to assume in the mid-single digit area for such a market with comparably high penetration levels, this is the other thing. It could be in this range.
Thanks.
You're welcome. And Lars again. Good to have you on the call.
I was shying away, but maybe, please help me understand again why it's taking management so long to decide on the US pricing. I mean, you mentioned 25 million of tariff headwinds for next year. Let's assume no major additional headwind from the US dollar, staying on the current level. You will have personnel costs increases. Yeah, personnel costs to 70 to 80 million. So 2%, I don't know, 5.5, 6 million. That already brings us to a 30 million headwind for next year, which is close to 10% of your EBIT. I mean, I would say it's a no-brainer that you need to increase prices significantly in order to secure the current margin level. What am I missing?
Yes, I would say, as I said before, maybe this was before you were able to join the call. So we are in the middle of the budgeting process right now, where of course there is a lot of cost discussions, and the first step at RATIONAL is always to start with efficiency measures, try to improve the efficiency to save costs, and we will see. Or we will get the results, I would say, in the coming weeks, and we have maybe already first figures there, and then there will be a decision on do we need additional pricing measures to come in a range, in a margin range that we would want to see in the end, that we would accept. And so from that point of view, difficult to say, yeah, why is that? I think we are not in a rush, because business is developing well, margins are on a good level, and I think there is no huge pressure for us now to react very short term. But you're correct, sooner or later there will be a decision, and we will then announce it as soon as possible. Yeah. Sorry for not having a better answer for you here.
No, all good. Thank you very much.
Can I maybe just ask sorry, I can't see who raised his hand, so go ahead. I'll just put me in the queue maybe.
In the end, it's only you and me, Nikolaus. So join us whenever you like. You're not disturbing anyone.
Oh, really?
Yeah.
Okay, sorry. I can't even see who's there. Okay, good.
We would tell you.
All right. Well, then maybe can I just follow up on that, on the US tariffs? So you said 25 million. Is my understanding that is 14 million incremental? Is that correct? Because you already have 11 this year, or is it
13.
Another 24?
No, 13 million incremental. And that's also the same
Okay.
thing. That this what was I was saying in my first initial statement before you were able to join. It's 24 million, and means plus 13 million compared to 25. Meaning an effect of around 1 percentage point compared to 25.
Yeah. Okay. And that impact assumes no pricing, as we've just discussed, correct, and no mitigating action. Or is there already some mitigating action?
No.
That's netted off this? Okay.
No. Excluding all what you said, yeah.
But you don't have any visibility yet on what mitigating could do to offset this?
Not yet, no. I think this would be too early to say that, but I think by the end of the year or early next year, we will have the complete information on that, and I would assume that the decision would be made earlier, before we have the final picture out of the planning, and then we say, okay, now we do an additional potential pricing action. So I would assume this would be available earlier, but I cannot tell you exactly when.
Okay, can I ask maybe just one final question on this pricing and US tariff thing? Is your thinking, which as a long-term investor, I would kind of go along the same lines. Is your thinking a bit more, let the others raise prices so we can take market share?
This is maybe one point that's important here to say, okay, if we would not increase prices at all, just a scenario right now, not a outlook, would mean, of course, in relative terms that we would get more attractive for our customers for sure. And maybe this would also help us to improve sales growth. On the other hand, I can share one statement of an analyst with you. He said he would wish that we would increase prices by 4%, because this would not enough to, let's say, annoy customers and hinders them from investing because it's not too much, but it would show some strengths that we would be able to increase prices. So this would be a magnitude that he would rather see positive than not increasing prices at all. From that point of view, I think there will be arguments for every action that we take, pros and cons, but in the end, I think it's management decision, and I hope, as you do, we get it soon.
Yeah, okay, understood.
Oh, Lars?
Yeah, just following Nikolaus, I'm a bit confused now. So the US tariff impact 13 million more next year than this year. So 11, 12 this year, 25 next year. So a total sum of at least 37 million or so.
No.
Okay.
2024
is the total sum.
Is the total. This year we had 11, meaning 13 million more.
Okay, understood. And although not necessarily relevant at this stage, but just for the sentiment and the outlook, the iHexagon unchanged outlook, right? Break even in 2 to 3 years' time, slowly developing.
Well, as said, very, very difficult to say. I think to repeat what we maybe had in a few calls before is there is really long-term projects with our customers. There was a statement from one big hotel chain. They say for them it takes around 5 to 7 years until they decide on a bigger rollout with these units. And this is a sort of confirming our experience we make with big customers. And again, I want to quote this KFC experience that we had in the early 2000s. There we saw it started in 97 or so, the project. The first bigger orders came in 2002, and 2004 there was a bigger rollout. So this is confirming a little bit this 5 to 7 year approach in these big customer groups, because there's a lot of testing, a lot of pilot phases in there. And that's why we think for us it's now important to get such stories like with Tottenham Hotspurs, which can show the potential customers have. And it is like we always said with the iVario, it might take a second or a third look until a customer decides, okay, I try one. And here we are in a completely new product category, which is not comparable with the new generation of an existing product. So from that point of view, we take the time, and whether it's 2 years, 3 years, or 5 years, I would say nobody can really say right now.
Understood. Thank you.
May I maybe ask another question on the top line? So the US, deceleration on a tough comp. You just mentioned, or we just discussed Europe, where you see a normalization to mid-single digit, and then Asia would probably have a tough Q4. I think that's what you mentioned in the call. Was it last week or the week before? And so can you give us the building blocks on how you will get back to the high single-digit growth? Because my understanding from the Q3 call was that you do expect a return to high single-digit growth next year. Maybe I misunderstood this.
Yes, yeah, that's correct. So meaning that we come to an organic growth level of, let's say, 7, 8, 9% is something that should be realistic. I think we had now 2 quarters in a row where we were able to do this. And I think the building block is indeed that we see in our figures, in our salespeople development, in our activity and development, meaning customer visits, cooking live participants, etc., that there is more customer contact, and in the end, the organic growth rates are at levels of in this 7-9% area. From that point of view, this makes us confident when we go on doing this in a successful way, that we are able to get the people to onboard them properly, that we are able to also translate this into sales figures. And this is not depending on one certain region. This mechanic is working everywhere more or less in the same way. Of course, in more penetrated regions, it's maybe more important to visit the people, to remind them of what's going on because they know the technology. And in less penetrated markets, you need to get them in a cooking live demonstration to show this new technology to people, that they understand all the advantages. I think this is maybe a little bit of difference, but I think customer contact is key to the future sales development. And from that point of view, we are quite confident. And region-wise, it's still the same story: over-proportional growth, double-digit in the overseas markets, and mid-single-digit in Europe, and in Germany, maybe rather in the lower single-digit area in total, coming out at approximately 7, 8, 9%. And what will be then with the FX development next year, which we see this year very negative? This is another thing we can maybe not control in the same way, but of course, we see that there might be some negative impact next year as well. Just out of the development of this year could be a little bit of negative headwind, but on an organic way, what we can control ourselves, we are confident to go back to that track that we had before the crisis.
Okay, understood. So you would expect Americas to accelerate again?
Absolutely. And organically, Americas or North America is at some 10% growth. So it's okay.
Yes,
maybe it's at the lower end of the range we would expect, but it's more or less in line with what we would expect here.
All right. Thank you.
You're welcome. So, is there any more questions? I don't see any more questions. So then I thank you for participating. And if there are questions coming up afterwards, please don't be shy and either write an email or give me a call. So this is well accepted, of course. So then take care, and I'm happy to see some of you next week in Wittenheim, and the others then next year. So we will presumably announce preliminary figures early February, I think 5th or 6th or so, and then have the press conference, earnings call, and the disclosure of the annual report on 19th of March. So with that,
great. Thank you very much.
Bye-bye. Thank you very much, and take care.
Thanks, Stefan.
Thank you. Bye-bye.
Bye-bye.